you guys are watching this before tomorrow because these are going to be nasty weeks ahead. And I know you guys like nasty, so we'll try to keep this PG. And cue the fire a second time. Apologies to you kids, but it's things like that got you here in the first place. But we are talking banking collapse. Oh, that's the 2-year yield. That's what the Fed has to follow. Oh, what are they going to do this week? Oop, better buckle up, Buttercup. I mean, the 2-year yield just went from 5 to 3. Jerome, you going to do it? Go ahead. Also, cue the fire a third time. You guys better be moving your digits. Otherwise, you're not going to be able to get your digits. And I don't care if you're SVB. I don't care if you're Credit Suisse, which they just made an announcement. You're going to like this. If you're Blackstone, who just defaulted. In breaking news, this stuff happens really quick. Like Blackstone defaults on Nordic mortgage-backed bond. And prior to that, everyone's like, get it out. And they said, nah, you can't. It's like Santa Claus, like a blink of an eye. Or does he do something with his nose? 1 minute, everything's fine. The next minute, Blackstone blocks investors' withdrawals. And that was in January. These were the birthing pains, which I told you. I said, it's a coming. Actually, it kind of reminds me of that song, Come a Chameleon. Is that it? No, we need something more like, it's a beautiful day in this neighborhood. I'm going to grab my wife's jacket because I don't have his jacket. It's a beautiful day in this neighborhood. Would you be mine? Could you be mine? Won't you be my neighbor? And I did tell you that all of this was coming because it started with this, right? I'm like, Fed's broke, Janet's broke, everyone's broke. And then we saw the birthing pains, right? I'm like, oh, get ready, you guys. And bam, everyone broke. And also, you guys, we are going into what I call the pain trade. It's going to be so painful for you. It's like what happens with Bitcoin. You're like, why are you doing this with such low volume? I'm so confused. And I believe the same thing might happen in the stock market. So on this channel, that's why maybe you look down to see if you've been unsubscribed to this channel. You just click the button back because Google hates me, but I understand. But I am just here to protect you and prepare you for the unexpected, kind of like marriage. And if you just laughed, you're probably on your second one. But guys, out of nowhere, truck comes. You're like, I wasn't even in the street. I was in my house. But at the end of the day, just follow the charts. Just buckle yourself in and look at the charts and go, okay, charts are telling me, oh, Bitcoin above 200. Okay, you buy. Bitcoin pumps, okay? It gets into Lux Algo. You sell. For some reason, you're terribly confused by the charts. Start with my swing trading course. 60% off. All my courses, 60% off. Just start there and then figure this out. And then go, I can't find any stocks. What do you recommend? Bravo for paper trading. And then I'll go, what about SIVB, which I said Friday, February 17th. Just paper trading, not financial advice here. Take out a big fat short and make a hell of a lot of money. And also, can I just tell you, it's sad when I go through Bloomberg and CNN and CNBC, and then they find this one guy and they're like, this one investor called SIVB. He said he shorted it. I scroll down. Maybe it's Johnny Bravo. Maybe they found me. No. Oh, shoot. Something tells me I will never be that legendary investor that called the top of the market or this. It's just you and I. Here we are. Like, that was a good call, Bravo. That was a 1 in a million, but too bad no one will know about it. Also, for those of you that email me and say, hey, Bravo, when are you going to lower the price? Like, 1-day deal on your swing trading daily watch list that you do every single day for your entire life. The answer is never. You will never see it go below 30. When I raised my bear market from 20 to 30, you will never, not one time, see me lower it. Well, unless someone comes over to my house, breaks into my computer and like, hey everyone, it's all free. But looking at, here's what the pain trade is going to happen. What is the Fed going to do this week? I'm guessing they're going to raise rates. Oh my gosh, but they have to, because you got to look at them and go, well, you're the boss. But they're really not. It's actually the bond market. The bond market's telling them you're a bunch of idiots. All 400 you have PhDs. Like, just flush those things. I think that's what it stands for. But I've been telling you on this channel for probably a year, just get ready for this market pump, because what you'll have is you'll have a Fed pivot. Okay, that's where it stalls. It kind of stalls in that area, and the market actually rises in these times, and you're going to be scratching your head and you're like, Well, I might as well just go all in, Barbara. Which I say that's perfectly fine. But you have to know where the sell button is and know when to do it and how to do it. Otherwise, you're going to lose all your money and you're going to be a bag holder at the top. And I'm going to say thank you. But going back in time, I'm showing you. This is why I don't want you to be confused. And if you're like, well, I thought you said the market was going to go up. I thought you said it was going to go down. Yes, it's going to do both. You just have to know which side to be on. Looking back, I can just do these little lines forever and ever. This is, it's flat and the market's running up. The Fed hasn't even pivoted yet. And then right when they pivot, so when you hear that they pivot, that's when the market dumps. So you should be seeing, and right now, if the Fed's raising rates, market should be going higher. I know that's crazy, right? Just follow the charts and just know in future or in the past, this is what has happened, and it is so painful. And if you do not know what you're doing, then you probably should be out of the market. Also, if you have more than $250,000 in your bank account, you probably should move it. And I've been telling you, by right there. Well, not financial advice, but that was over 5% that you got. I did it. Return on my investment for 1 year. And everyone's going to be piling into this because it's safety. Do you understand now why people pile in? They're like, oh my gosh, everything's bad. Run. So you got to move it out of that bank. Well, I can't tell you to do that. You can call your bankster, and say, hey, can we buy some 1 year, 6 month, 3 month, whatever you guys want, treasuries, and then it's safe. Well, it's really not safe. It's a big Ponzi scheme, but it's safer when they close the doors and they're like, well, make sure you get your 250 back, which that would be the FDIC, who unelected, right? You like that? It's all these unelected people that get to do what they want to do to improve their lives. Nope, you don't elect Janet. Nope. Jerome. Nope. Right? You're like, what is happening? Why can't we follow the Constitution? That's your fault. You got a little lazy on this one. Also known as dropping the ball, but it is okay. They will vote for themselves. They will make what is right so their digits go right. And Treasury Secretary Janet Yellen says, no, not all uninsured deposits will be protected in future bank failures. So, like what I've been saying before, now is your time. You have a few hours left. Also, if you do not you're like, but I don't like the bond market. Okay. Here, can you hold it? Okay, then it's yours, right? They can't take it from you. Gold, silver, Bitcoin, but please, you guys, buy low, sell high, or accumulate low. I've been saying for months, under 20, you want to accumulate, go ahead. And sorry, I had to take the jacket. Woo, getting hot in here. I keep cueing the fire. It's like 140 degrees in here. And coming in from people that have a lot more digits than I do. BlackRock. Sweeties. Silicon Valley Bank collapse. More shutdowns could come. Let me get rid of that word could. Will. BlackRock CEO Larry Finkster warns. And here, Finkster, let me fix that article again. Shutdowns will come. Guys, come on. Are we even in the first inning, or have we even entered the parking lot yet? Oh, and guys, just to let you know, because nothing is exact, it rhymes, right? But just to let you know, and I remember the 80s, I remember the 90s, I remember the 70s, I remember my mom making a lot of money in the housing market and then losing it, and I'm like, oh, hey, so this is how the markets work also. Watch yourself in the housing market, okay? So anyways, move the digits. 80s, 90s, when more than 1,000 institutions failed. And then they consolidate to bigger. And bigger does not mean better. Bigger does mean it's better. I know this from growing up. But this is what's happening like right now. UBS buys Credit Suisse, $3.2 billion. As regulators should have grabbed it earlier. Now the stock, what is like half off, 75%? Okay, all right. Good time to buy. Look to shore up the global banking system. And I say, again, we're in the parking lot, okay? Maybe first inning. You haven't even seen the home run yet. Wait until Jerome gets up to bat. Oh, this is going to be great. Fed, Jerome poised to approve another quarter point rate hike this week, despite market turmoil. You go, Jerome. You just go ahead and make your little orange line go way up there. It's okay. Don't look at what the bond market's doing, because it is going to destroy all of us. Now, everything that I've said in the past, when I'm like, wow, the whole Everything's inverted. All those, the 3, the 6, the 1, the 2, the 10, the 30, it's all inverted every single time. Well, maybe there may have been a fart in the wind out there that's like, oh, did it kind of? But basically every time that this happens, you go down in flames. Or you could go down in victory if you just know how to click the button. And that would be like the bond market. This would be TLT, your price target's up there. You see? You get right above my little orange line, which if I change the line just slightly for you into a candle, you could see it's getting there. And also what might happen, there is a high probability. See, there's the 200. It's just sitting on it. And that's 1, 2, 3, that's 4 times. You got to get above it. Otherwise, it's going to get rejected there. It's going to come down. It's going to retest. It'll probably break that, find support, and then rip higher. That's just probabilities. That's what I do. Learn how to do it. And also, if you want me to zoom out so you can see the bond market as a whole and that head and shoulders that I'm like, oh, that's a great time to put in a short. Oops, to buy. Plays out like right on price target. But here we go again. So you could go from 95. Congratulations for those of you that are hodling from 95 all the way up to 175. And it does happen quickly. Like as fast as it comes down, it could go back up. Apollo is telling you guys this banking crisis is going to tip U.S. into hard landing. Oh, we got live now. Special edition, Bloomberg surveillance. Breaking the banking system down. UBS to buy credit and how money is created. It's not. It's just dead. It doesn't even exist. And then all the people are like, oh, this is a great place to put my nothing. And then you got me over here is like, why don't you take your nothing and maybe buy something that you can hold? I don't care. Buy chickens, okay? And then they produce eggs. I heard an egg is going for about $50. So you need to understand that in life. Own things, not this. This is just sheets of paper. I mean, I guess if you're into drawing or something like that, but own real assets that can pay you back. And that is why I said, you can not that I believe in the debt-based system, the bond market, but I move those digits and then I go buy the things that I want. Because when this whole thing goes and they're like, well, here's your 250 when you have 250 million, well, that's a pain trade. You also feel like a complete idiot and you would tell no one. But Bravo, why don't we just all move our money into different banks? Well, hopefully it's not midsize. Hopefully it's not on that. It needs to be on the WEF. Just look at World Economic Forum. Make sure it's on their site because then it's okay. Then you're completely safe. But if it's not, you should be concerned. Also, for those of you that are in credit unions took on like the biggest auto debt. They're like, yeah, you get a car. It was like Oprah Winfrey show. Everyone gets a car. Now everyone's like, I can't pay for my car. I just got laid off. But mid-sized U.S. banks asked FDIC to insure deposits for 2 years. Everyone gets it. I mean, you could be at a little bank and just move it to something safe. Like silver or a bond or something. You got to move it. Also, if you can move your finger onto the like button or the subscribe or something, help a brother out or learn how to do all this stuff. Take advantage of what I lay down. You pick it up and you go, thank you. Thank you, Mr. Bravo. And I will shake your hand and say, you're welcome. And I will see you tomorrow.